Hello, and welcome to myfinanceteacher.org. Today is 24th of April, and if you are watching this on my YouTube channel, this video is probably already a few days old. Instead, if you want timely updates that might be helpful with your investments, although this is not investment advice, go to myfinanceteacher.org and join the members list. In this video, we're going to have a quick look at precious metals and the general stock market. Before we continue, let me remind you guys to subscribe to the channel if you haven't and click that bell notification. Thanks a lot. Over the last few days, I've been thinking whether we've seen a daily cycle low in gold on the 21st of April or not. I think there is a chance we still are going to see another decline in gold prices, maybe down to 1650, and the reason for that is because it's not very likely to see a short-term daily cycle lasting for only about 32 or 36 days. That's if that daily cycle finished on the 21st of April. Although it is a possibility to have such a short cycle, usually these last for about 1.5 to 2 months, so I would say there is about a 60% chance of gold coming down maybe to the middle of that Bollinger Band, maybe to retest that 1650 before we shoot higher towards 1800. But there is also a 40% chance that gold just continues higher from here. In either case, so far so good. Since the beginning of this intermediate cycle, gold has already rallied by 20%. We had been 100% allocated in the precious metals part of the portfolio before I sold the GLD at 159.59. Now with 40% of the cash, I'm trying to catch an opportunity to enter into GDX. So looking at GDX, I'm already 60% in, and yesterday was a very tempting time with the GDX breaking above the long-term resistance and even reaching all the way up to $34.74. But it's poking at the upper range of the Bollinger Bands again, and by the end of the day we see a significant decline from the intraday highs. GDX closed at 33.42, plus there is often a retest of a breakout. So I think again there is possibly a 60% chance that I will get an opportunity to allocate the remaining 40% into GDX once the price closes one or two of the recent gaps. The upper gap is at about $32.6 and the lower gap is at about $31.4. So if I see GDX returning back to 32 or so, I might allocate all of the remaining 40% cash. On the other hand, if I see GDX going above the recent high, say going above 34.8, I might actually allocate another 20% just in case if the rally continues from here. That will leave me with another 20% to add in case if there is a decline a little bit later or once we confirm a move in GDX up to the next target at about $39. Next, looking at silver miners, there is a similar situation in silver miners. This is SIL. We have a couple of gaps over the last 3 days, and over the last couple of weeks we have several pokes at the upper range of the Bollinger Bands. I do have a little bit of the silver miners, but most of my allocation is currently in gold miners. Looking at, say, last couple of intermediate cycles, silver miners didn't really outperform gold miners. We see under 50% gain in the middle of 2019 and around 26% gain in early 2019. And on GDX, over 50% gain in middle of 2019 and just over 30% gain in early 2019. So relatively similar numbers. So for now I'm mostly in gold miners. Next, a quick look at S&P 500. As we mentioned, we're probably going to slide down over the next several weeks, maybe at least a couple of weeks. S&P 500 is failing to go convincingly above that 50-day moving average. The ongoing daily and intermediate cycles have been going on for just over 1 month, 31 days. The short-term cycle usually lasts for a couple of months. So we probably have another couple of weeks or several weeks to gradually come down in S&P 500. There is an FOMC meeting coming up on the 28th of April, that's just in a few days. But after a nice bounce in S&P 500, which is now 28% above its recent lows on the 23rd of March, I don't expect anything drastic coming out from the FOMC meeting. I don't think there will be a huge need for them to do anything significant to help the markets stay up. So in the stocks related part of the portfolio, I'm now fully in cash. Although there is also a chance that S&P 500 hasn't finished rising within the ongoing short-term daily cycle. After all, it's only been going on for 31 days. So we might actually see S&P 500 break above the 50-day moving average, maybe retest the 200-day moving average before it drops into the daily cycle low sometime over the next few weeks. So in this case, a risky strategy would be to enter if S&P closes above the 50-day moving average with a tight stop loss just somewhere below that 50-day moving average, with the plan to exit somewhere close to that 200-day moving average. Although, as I mentioned, that might be a little bit risky because that would be a little late in the ongoing short-term daily cycle. But if we do come to that, I'll make sure to keep you posted at myfinancesteacher.org. So again, if you're watching this delayed version on YouTube channel, make sure you join the members list at myfinancesteacher.org. For now though, have a nice Friday, have a nice weekend, and good luck in your trades.